Good morning. Today is Tuesday, November 14th. I'm Joe Terril, president of Terril and Company, private wealth managers headquartered in St. Louis, Missouri. This is a video update of our thoughts about the economy and investment markets. This morning, the government released a consumer price index, and it showed inflation being lower than expectations. And this is what the markets hope for. So there is a change of thought now that inflation is solved as a problem, and early next year the Federal Reserve Bank will begin to cut interest rates. Interest rates are going to go back down, and the economy will boom, and we'll go back to where we were in the 2018, 19, 20, 21 area. We disagree with that premise. Last month inflation was up 0.6%. This month it's only up 0.1%. And we are not convinced that the problem of inflation is over with. We also are in the camp that believe the interest rates are going to stay higher for longer, and we don't see the Federal Reserve anxious to cut interest rates early next year. We have, as we mentioned in previous videos, been a buyer of stocks on pullbacks that we saw in October, and we will continue that between now and the end of the year if in fact we continue to see tax loss selling and we see institutions and or individuals selling stocks for tax losses that we think have excellent fundamentals, good cash flow, hopefully dividends, etc. So in general this year, stocks are unchanged to down slightly. The only reason the averages, stock averages, are higher is because of a few stocks that, because of market capitalization, dominate so much that the averages go where those few stocks go. But underneath that, stock prices are lower again. So for the first time in 2 or 3 years, there actually are good investments in some stocks that investors, for whatever reason, do not like. In that area, financial stocks, bank stocks fit into that category. One of the things that we're going to be buying more of are gold stocks. These are mining companies that are generating tons of cash flow, paying dividends, that are selling as cheaply as they've sold in 15, 20 years. We like these companies. There are also stocks in the area of food and or stocks that have gone down because investors are convinced that the new weight loss drugs are going to revolutionize the world, and therefore no one is going to eat snacks, no one is going to drink any sugared sodas, and it even carries over into the fact that some of the medical companies are down dramatically in price, as people believe when everyone loses weight, there'll be no more need for back surgery or heart surgery, etc. So we don't subscribe to that. We see this weight loss thing as being real, being valid, but it isn't going to revolutionize the world as some people believe. You still are going to be required to be on a strict diet if you're taking the weight loss drugs. And we know what the history of consumers in the United States and around the world for that matter are about staying on strict diets. So the other big trend that people are talking about right now is artificial intelligence within the computer world. Artificial intelligence has been around for 10 years. It's accelerated 5 years ago. And this artificial intelligence is not going to run our daily lives and everyone's going to use it for everything. So we at Terril and Company like to look for investments that are beneficial of people and institutions that want to chase momentum and chase these names that they believe are going to grow to the moon because this trend is never going to stop. So in general, we like stocks that generate a lot of cash, that are in basic industry businesses. We like the steel stocks right now, in particular Cleveland-Cliffs. As I mentioned, we like the banks, we like gold stocks. These are all things that are extremely reasonably priced right now. In fixed income, we're continuing to stay very short with maturities. We're continuing to stay short with our durations. We're not convinced that long-term interest rates are going back to 2 or 3%. There is a tremendous amount of federal debt that needs to be refinanced in the next 3 to 4 months. We want to see who's going to buy all this debt and what interest rate are they going to demand. So with fixed income, as I mentioned, we continue to stay very short. We're being rewarded making 5 3/4, 6% while we wait to see what's going to happen with inflation and what's going to happen with some of these terrible events around the world, whether it's the recent problems in the Middle East, whether it continues to be Russia and the Ukraine. How are our relations with China? How is that going to calm down and not cause an issue? So we remain cautious, but we are more optimistic about some of these stocks. We believe the economy is going to continue to stay strong. Recent evidence is the economy is doing just fine. And there are pockets of weakness here and there, but the consumer is continuing to spend. Couples, husband and wife, are both working. They're both getting pay raises. There's no indication that they're tapped out, that they're not going to spend anymore, that their credit cards are all maxed out. There's no evidence of any of that. If anything, it's the opposite. So we're very bullish about the economy, and we like a few select stocks. We're continuing to stay short as we believe interest rates are going to stay higher for longer. So with that said, Brian Curtis, our producer here of these videos, I thank you. And we'll be back in a couple of weeks, 3 weeks, as we head in towards the end of the year with updates on our thoughts. Everyone have a very happy Thanksgiving for you and your family.